Ladies and gentlemen, welcome back to the channel. Today is a green day for AMC stock. We'll talk about what's going on here in our marketplace today. One thing that is notable, 10-year treasury yields falling quite a lot today, about 7 basis points or so. So we're going to get into why. We're going to look at some of the data that came out early this morning, go over everything you need to know in regards to AMC stock. AMC stock is currently at $6.20 per share. You are up 1.5% at the time of recording this video. So hit the like button, subscribe to the channel, all that good stuff. Let me know what you guys think about AMC stock right now. Are you buying more? Are you selling? What are you doing with your positions? Are you buying other stocks? Just what are you doing heading into 2024? Let me know down below in the comment section. So first things first, AMC stock is doing okay today. It's doing pretty well. Relative to some of the other days that we have seen for AMC stock as of recently. Definitely to see AMC stock up 1.5% is better than not. Now, AMC is actually quite a bit outperforming the markets today. IWM is pretty much flat. The triple Qs basically flat as well. So AMC stock is actually outperforming today, which is a little bit of good news. Now, one of the biggest things that is actually happening today, 10-year treasury yields dropping almost 7 basis points. If we were rounding here, we would say 7 basis points, but technically a little bit over 6.5 basis points, down to 3.81%. Now, not a lot of specific reason for this, I would say, besides the data that came out today. So as per the trading calendar, we did get Richmond Fed manufacturing that came in at -11. Estimate was -6. So that was way worse than expected. Richmond Fed manufacturing shipments fell 17 to -17. Expectation was -9. So yeah, some pretty rough data there. Richmond Fed services index came in at 0. The estimate was 1. Dallas Fed Services Index came in at -8.7. Estimate was -11.5. And the Dallas Fed Services revenue came in at 4.3. The estimate was -2.3. So a little bit better from the Dallas Fed, but Richmond Fed data looking pretty rough there. Now, throughout the day today, we are going to get a 5-year bond auction. That will move things around quite a bit. 10-year treasuries at about 3.8% means 5-year bond auction is probably going to come in a lot lower than that. The last one we had was 4.42% for the 5-year bond auction. So we're probably going to see the yield fall quite a bit from there, and that's probably going to be good news for stocks. So that is one of the big stories today that is causing, stocks or treasury yields to fall. Now, this I think is pretty interesting as well. It says the U.S. avoided a recession in 2023. What's the outlook for 2024? Here's what experts are predicting. It says the prediction is based on the same factors that prompted economists to call for a downturn in 2023. As inflation has run hot, the Federal Reserve has raised interest rates. Typically, that dynamic has triggered a recession, defined as 2 consecutive quarters of negative gross domestic product growth. Some forecasts are optimistic that can still be avoided in 2024. Bank of America is predicting a soft landing rather than a recession, despite downside risks. More than three-fourths of economists, 76%, said they believe the chances of a recession in the next 12 months is 50% or less, according to a December survey from the National Association for Business Economics. So you're actually not expecting a recession as the consensus. What looks like for next year. I know there's a lot of different data, a lot of different surveys that you're going to find on this, but as of right now, it just doesn't look like that is the most likely outcome. That's not something I am, currently expecting. This says, quote, our base case is that we have a mild recession, said Larry Adams, chief investment officer at Raymond James. That downturn, which may be, quote, the mildest in history, may begin in the second quarter, the firm predicts. Of the NABE economists who also see a downturn in the forecast, 40% say it will start in the first quarter, while 34% suggest the second quarter. Americans who have struggled with high prices amid rising inflation may feel a downturn is already here. To that point, 56% of people surveyed by Mass Mutual last year said the economy is already in a recession, while a nationwide survey from this year found Americans fear a downturn as severe as 2008. Layoffs, which made headlines at the end of 2023, may continue in the new year. While 29% of companies shed workers in 2023, 21% of companies expect they may have layoffs in 2024, according to Challenger, Gray, and Christmas, an outplacement and business and executive coaching firm. To prepare for the unexpected, experts say taking these 3 steps can help reduce your debt, stress-free finances, and boost emergency savings. So pretty interesting what the opinion is for 2024. It seems like a pretty mixed bag, and depending on what surveys you're looking at, what bank you're talking to, some of them think a recession is coming, some of them don't. The average American believes we've already been in a recession for a while now. And that, to a contrarian perspective, might say, hey, maybe the economy gets better from here. You could always make that argument. Now, the latest AI investor sentiment survey that we do have shows the bulls firmly in control. 52.9% of investors are bullish, neutral investors at 26.2%, and bearish investors at 20.9%. So the bulls definitely leading the charge here. And again, even the start of the Santa Claus rally has been pretty nice. I mean, it's been a pretty solid move so far, so we'll have to see. If you take a look at the broad indexes today, Russell outperforming slightly. The Dow is doing the best, up about 0.2%. S&P is basically flat, Nasdaq's basically flat, and the Russell is basically flat as well. Something that is notable, though, the VIX is down 3.62%. So definitely seeing some unwinding of some of those bearish positions that maybe some people had on the S&P 500, which I don't know if that, makes any sense. But hey, we'll just have to wait and see. So there's that. So let's go ahead and get into AMC stock specific news. There's just not a lot to cover this week. As we know, this is kind of a record week for in more recent times. We don't have a single company reporting earnings this week, not a one that has analyst estimates. That hasn't happened since 1997, and you really don't have much for data as well. So the markets are kind of open for interpretation, and where the markets go from here is really just up to how positioning is. Now, technically, you are in the Santa Claus rally right now, and since 2002, so the last almost 22 years now, you've only had 3 periods or 3 years that were actually negative. That was 2008, that was 2012, and that was 2018. So if we're again green this time, that's going to be 5 years now in a row you are green for the Santa Claus rally. The average return is around 1.4%, and you are green 80% of the time. So those are some pretty strong statistics that say, markets are probably going to be green this week. But that is undefinitive. Who knows? Now, short interest of free float at 9.38%, $141.83 million worth of short positions currently in AMC stock. Days to cover 1.14, 23.21 million shares that are currently sold short. Shares out on loan 17.43 million. Cost to borrow 1.17%. Utilization of 24%, I believe is said. 24.5%, and a short score of 52.31 out of 100. Short interest climbing from what the numbers looked like yesterday at about 8.5%, now to almost 9.5%. Cost to borrow average 1.25%. Cost to borrow minimum about 0.5%. Cost to borrow max sitting at 1.2%. So not the most crazy numbers here. I personally think, if you've been a viewer of this channel for a while, I think AMC stock is hundreds of percents sold short, and that's just my personal opinion. Now, the option activity here today is remarkably bullish. Call volume at 86.35%, put volume at 13.65%. So you have a put to call ratio of 0.16. That means there's basically five calls for every 1 put that is being bought today. That is a very, very bullish number. You can see the put to call ratio sitting at more kind of normal levels for AMC now at about 0.67, which means there's usually around 2 times as many calls for every 1 put that is on the options chain. The options chain goes for the next 1,000 days or so. So definitely covering a couple of years there in this put to call ratio statistic. Whereas before you were at 2-3 times as many puts relative to calls. You're not there anymore, so that's great. Over the past week, you've seen 10 orders totaling $683,000. With a positive order value of 88% from hedge funds and institutions. So even hedge funds and institutions starting to get a lot more bullish on AMC stocks. So that is also a good thing rather than a bad thing to see, in my personal opinion. Now, if we take a look at the option activity here expiring this week, you got about 20,000 calls currently in the money, 79,000 calls out the money. In the money puts at 16,000, out the money puts at 23,000. So there is a decent amount of activity itself. I mean, most of this to the call side, to the bullish side. If you do get news or a reason for AMC stock to continue higher from here, that's going to be good. The fact the stock is up today is a great sign as well. You're up almost 2% now. Trying to get a spread here between your multi-year low at $5.93 and trying to get back into that $6, $7 range. We'll see if that does happen. More capital is likely to flow into our markets, which I think in and of itself is going to help out AMC to move higher. Something is very interesting that is happening on the global stage, though. You can see the Chinese Shanghai Composite Index dipped to 2,900, down almost 15% from its April peak. For comparison, the MSCI World Index in US dollars is up 13% since then. A 28% performance gap between China and the world. So something could be happening here that is maybe not so great for China, which might turn out to be not so great for the world. We'll need to see, obviously, a country like China or a country like the US having problems, can lead to a larger problem. We've seen that in, 2008, right? The US had all these problems. The rest of the world wasn't much better, but what happened? That did spill over into a larger problem for the rest of the world. But all in all, I mean, Jim Bianco with Bianco Research, I think says it best. Investors usually wait until the first week of January to close out trades at this point or to initiate new trades, right? So think about it like this. If you needed to do tax loss harvesting, if you wanted to take some profits, you already did that. Okay. The last week of the year after Christmas is typically not when you're going to get a lot of new positions being taken, right? It's where a lot of people are on vacation. Their books are already settled before Christmas. There's not a whole lot that is going on right now. And I think that's why you don't have any economic data. You don't have any companies reporting earnings, literally nothing. And you can see it from this chart, the median absolute percentage change by week from 1927 to now. And you could see this week, I mean, it doesn't even have a bar. It's like nothing, right? You don't really tend to see all too much happen during this period or this week. Usually it's a shorter week in some capacity or another as well. Now, the first week in January is where you tend to get the largest average returns. Fun fact, the Santa Claus rally, most of the gains from the Santa Claus rally, the 1.4% we mentioned in the beginning of this video, most of that actually happens the first 2 days in January because they tend to be strong most of the time. Investors tend to be pretty optimistic about the new year. So yeah, definitely coming the first week of January is going to be a big one, right? You definitely want to be watching to see how money is moving around and positioning at that time, because that's going to tell you a lot about where money might position and continue to position throughout the rest of 2024. You guys already know my opinions. I like small mid-cap stocks right now, interest rate sensitive names. I like AMC. I like companies that are beaten down right now, that are higher quality, that are household names, that are going to benefit from liquidity, from capital coming back into our markets. The biggest problem with AMC right now is this dilution, right? We know there can be more dilution, and there will be more dilution at some point. That is potentially something that helps keep AMC stock lower and helps prevent the stock from going higher. That's unfortunate. We'll have to wait and see. Obviously, anything can happen. AMC's performance today looks relatively strong compared to the broader markets, but there's never a guarantee that, Adam Aaron isn't going to come out 10 minutes from now and dilute shareholders. So I think that might keep some people on the sidelines. We definitely want, a little bit more clarity from Adam Aaron, what his plans are going ahead with the dilution that he is allowed to do. So when that happens, I'll become a lot more bullish on AMC, but until then, it is a tough situation to be in. Nonetheless, I think just liquidity and capital coming back into our markets can be a good thing for AMC stock. So let me know what you guys think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.